Uncle Chartist, when is volatility coming back? Looking at the SPY here, it gave us a higher close. I mentioned, guys, as long as we above 585, we should stay bullish. We should stay bullish. And now we got another higher close. I mean, since the gap up, we got 1, 2, 3, 4 higher closes in a row. And I'd have to say, the intraday price action, in my opinion, was pretty good. If we go to my Discord, I had a plan. If above 585 and 587 clears, 589 and 590.5 plus incoming. For a pullback, 585 must hold as resistant or turn into resistant, and 583.5 fail to put 582 or lower in play. I tell you, it started chopping in the morning. 585 to 587 was the morning chop range. Wait for the breakout. If 587 clears, 589 plus in play. 585 fails, 583.5 or lower income. And Uncle was watching the charts ready to react. Because right here, you guys can see right here in the morning, it was just chopping. I had 585 and 587 as the chop range that I was watching. And then boom, it cleared 587 on the 15-minute chart, guys. It cleared 587 on the 15-minute chart. And look what happened after that. That was our trigger. 587 did clear. I let the group know, hey, confirmation. If you, a sheep style trader, you've been paying attention and you've been watching Uncle for a while, you know what I consider, intraday at least, as a breakout and a breakdown. Uncle uses the 15-minute chart. This is an example of a breakout. We clear it, especially you see the context, what happened at the 10 o'clock candle. If you look at what happened at the 10 o'clock candle, you see the 945 candle, it bounced off 585. The 10 o'clock candle, it hit 587. It's like a knock on the door, and then it didn't open. And then the next candle around 11 o'clock, an hour later, they smashed the door open, cleared 587. We had a nice pop to the upside. Good for an intraday move. Now, we look at the daily chart, though. Compared to what we had a few weeks ago, not too long ago, early April. Remember all that volatility? Where's the volatility? Is it back? Is it going to come back? I tell you guys, I'm looking at the VIX. It's getting tight. There's a little wedge here, downtrend, whatever you want to call it, plus my 117 support level. It's getting tight, and I think a big move is incoming very soon. Maybe in the next couple of trading days, maybe early next week. And it's going to affect the SPYs. Lately, the SPY has just been melting up, taking the stairways up. But you guys all know the old saying, stairways up, elevator down. So it's very important we know the levels. And as I've been saying all week, 585 is that level. And if I zoom in a little bit more here, you guys can also see that the market makers, the people that move the market, agree with me. That 585 level means something. You guys can see the last two candles, there's been buying pressure from that area. Even today, especially today, around 585, which gave us the push up closing today around just below my 590.5 level. Just below, a few cents below it. So do not get bearish on Uncle until we get that elevated down rug pull style move. And you'll know it based on the price action when we get that false breakout loss of 585. Now, I do want to mention that we did take out another pivot level, which is around 589. Remember the inside candle setup I spoke to you guys about yesterday? The mother candle's high was around 589. We did get that daily chart close above. So based on that setup, okay, we got the breakout and the bounce of 585, stairways up, and now we cleared the mother candle's high at 589. As long as above 589, guys, more upside is possible. Taking out 590.5 should send us higher. 592, 595, 598, and possibly 600. But we need to stay above 589. Keep this inside candle setup intact because it ended bullishly. Keep it in bullishly intact and must stay above 589 to put those levels in play, especially 600. Now, if we break back below 589, elevator style, if it breaks down non-elevator style, like just break down normally, you might want to just play it level to level because the dip buyers have been buying the dip lately. But if it breaks down elevator style, 589 and 585, those are the two pivot levels to watch. Losing 589 would invalidate the inside candle's breakout. That's make it bearish. And breaking down 585 would give us a false breakout based on a macro level, fib level. Remember, we broke out 585 May 13th, and the last couple of trading days, we turn it into support. Resistant, turn into support. That's the bullish price action behavior. So you got to watch behavior. Is the behavior bullish or bearish? Right now, it's still bullish. So we stay bullish. We traded bullish. False breakdown setups and breakouts, regular breakouts. But if the behavior starts switching and we start breaking down 589 and 585, that is your sign that we are going to get a pullback, and we are pretty extended from the 200 daily moving average, the 5 daily moving average, even this uptrend line. So bears definitely have a good reason to push SPY back to the downside. But don't think that it has to. Just because there's a reason doesn't mean it has to. If it wants to, it will. And if it will, it'll break down those support levels that I mentioned. So be ready for more upside or move to the downside. Doesn't matter. We know the levels and setups, and we just trade it unbiasedly. Here is QQQ. I had a 522 level, okay? 522 level. It just came a few cents shy of my 522 level. The reason why it's important to me is because that 522 level was a strong buy zone back in February, and it was a false breakout of that level, or it was one of the setups that I was watching back in February. I lost 522, and it led to a beautiful move to the downside. Now here we are back testing that same level as a resistance, and on the initial test, we got some selling pressure. So if bulls want more upside, 520 and 522 are the two levels that must clear to give us more upside. Possibly send us up to 526 and 530. But if 522 truly rejects, it needs to break down support levels. Right now it's around 518-ish as of recording this. I have support at 517 and 515. Watch that 515 level. If it fails, then it's pullback time down to 511, 507.7 or lower. We have a big gap all the way down to the 490s. But if we consolidate a little bit and we clear 520 and 522, more upside is coming, guys. NVDA finally chose to chop today. It's been destroying the bears for a few days. Finally decided to chop. It did close just below the 135 level. It did hit a macro level, fib level that I had around 136.3-ish. It hit that level perfectly, actually, and rejected. So the two resistance levels to watch. If we decide to consolidate and upside is the plan, 135 and 136.3 are the resistance levels to watch to clear 138 and 140 plus. But if we start breaking down support levels, guys, 133.5, 132, and 130.6, we are dropping. It's going to be pullback mode, and there are lots of gaps to fill. First gap is around 130, actually. Another gap's around 123. Another gap's around 117. And there's another gap around 109-ish. So bears have lots of reasons to head down. But it doesn't matter what the reason is unless they actually start breaking down support levels. 133.5, 132, and 130.6. If we fail to break down support and we consolidate and we clear 135 and 136.3, more upside is coming. Tesla finally got a lower close. But they still fail. Bears still failed to break down at 339.8 fib level. Plan still the same, guys. They tried to do it intraday, gave us a nice about $5 drop to the downside before it bounced. But the plan's still the same. It's not official on the daily chart. It has to be official on the daily chart for a swing move. 339.8 still must fail as support. I have support at 338, 334, 332, and 330.6. Watch those support levels. Those support levels fail, and I do mean all of them. It's pullback time. Otherwise, we're still overall bullish above 339.8. After multiple updates, consolidation is healthy, guys. But if we consolidate overall above 339.8, we are still bullish. Clearing 343 and 345 would send us back up to 347, 350, 353 or higher. And here is coin. Been very volatile lately, to the upside, to the downside. It's amazing. But it did lose a fib level today, around 246.7. Closed today around 244.44, which is also below my 245 level. So if it keeps going tomorrow, 243, 241, 239, critical one, needs to fail. Below 239, I would definitely favor a much deeper pullback, another $5 to $10 drop to the downside. But if it fails to break down those support levels and both 245 and 246.7 can recapture, then guess what, guys? False breakdown setup, and that is your trigger to enter calls, and we are popping back to the upside. Now above 246.7, I have 248, 250, 252, 254, 256, and the critical fib level at 257.5. Here is the VIX. Now, once again, it's getting tight. It's getting tight. I feel a big move is coming. According to the VIX, it's getting tight. If 17 fails, the VIX is going to drop even lower. And that probably means SPY is going to continue melting up. But if we break out this wedge or this downtrend line, it needs to get above 20. Well, actually 19 and 20.8. 19 and 20.8. If it clears, guys, it could be nasty. It could be a big pop to the upside. And if it's a big, nasty pop to the upside for VIX, it could mean rug pull time for the SPY. So if you trade in the SPY, I would watch the VIX closely in these next few trading days. All right, guys, thank you guys so much for watching. I love y'all. Peace.